And now a curious adventure production. So I'm just working on some new stuff with streaming, and I have an announcement. Whoa, does that say Bitcoin? Why I changed my mind? Yes, it does. And I'm going to tell you, of course, why it is. It's because I realized that I wanted to do it for the easy Lambo. Actually, no, that's not true at all. In fact, I am advising people to watch this with caution, entirely caution. And so, first of all, I wanted to talk about this because I talked about it a decent amount, and I've had situations that come into play with some of my friends, and so I thought that I would do this. But first of all, my situation is not anybody else's situation, and most important is researching your own stuff and caution. So this is why I've been kind of hesitant about Bitcoin forever, and so I want to just say about me personally, so you know that you're not me, is I started investing in 1998, and in 2016 I actually traded as a full-time job, and I've lived off of my investments that I've made since 2013. I have a huge diversified portfolio. I'm not insanely rich, but I have my stuff really spread out in a lot of different things, everything from owning parts of real estate projects to owning stocks and bonds that I actually have, to things that are in diversified investments in supply chains and blah, 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 so much stuff. And so my big thing, and that little pie graph there is actually not real. It's the idea of diversifying. And that is one of the biggest things that I have about the people who are involved in the Bitcoin thing, is that people are like 100% in it. And even though I've had a major change in why I think, and I'm going to explain why that is, I'm still, the maximum that I am going to invest in Bitcoin is about 10% of my portfolio. I'm not going to talk about what that means, but just as a simple fact is because the basis of this and the basis of my hesitation in all this is that investing has a long history, and there's no precedent for anything like this happening. Okay, nothing. And so I just brought this chart up to show some general charts. And so the idea of something with a trajectory that goes from only from 2014 at basically zero, close to zero, to at where it's at right now at 57,000 is unprecedented. Well, there's no precedent for it. And so if you look, this is the Dow Jones going from somewhere around 10,000 to 30,000 over a period of 30 years. All right, this is the S&P, or no, I'm sorry, this is gold. This is gold, and again, this is gold. This is only about 5 years in gold, but if you look, it's gold going from 120 to only 200. It didn't even double, and that's what the idea of kind of the more stable store of wealth investments, and I'll talk about that a little bit later, but gold has never done anything like Bitcoin's doing right now, or will do. I believe that it will. So you look at this is the S&P, which is Standard & Poor's. It's another index that is like the Dow Jones, and you can see that this going back, I mean, this is kind of like a more modern version of the Dow Jones with more stocks that make up the profile that's in it, and you can see that from going all the back to the 90s when it started at 50, and this is an index of it, but it basically from 50 to around somewhere hovering around 400 over a period of 30 years. All right, so let's go and take another, and here's another look at the SPY in the recent past. It's just not even remotely the same kind of movement and trajectory. And I just bring this in because there's that big dip that's in there, and that's because of coronavirus. And those are things that happen, and you'll see the major movements in these more typical things are because of something that happens like that. And let's bring to bring full circle, this is normally what happens when you see something that has an insane spike. All right, so the insane spikes are almost always historically associated with something that is pump and dump, which means they hype something up really hard and there isn't a real value behind it and it crashes. And this is a recent one. It's the unfortunate people who got involved in GameStop, and basically they got involved in something because of hype, of marketing of the people, and there were a lot of emotional reasons behind it, but there was no reality behind what was going on with GameStop. And this is what happened. And a lot of people were like, well, the stock market's a casino, and the fact of the matter is the stock market is not a casino. There's a big difference between gambling and making a risk-oriented investment over time. And it's a massive difference. And I said this once before. I said, there's nobody in the world who is good at slot machines. There isn't a single person who is good at slot machines. That's a casino. There isn't a single person. Once upon a time, I thought I was good at roulette because I had this crazy idea that I could figure out. You can't. It's not. But on the other side, there are people who are excellent at investments because they see strategies. And so that's the difference. And the GameStop thing was a casino, and there are times when investments act like it's a casino, and there's times when they are actually thought through. So I'm going to talk about why now I am doing what I am doing and what I am doing with Bitcoin and what I see in Bitcoin, but just to see how crazy this is. So Bitcoin went from, this is only a year of data, and it went from 10,000 at the low, go up to 55,000, a multiplier of, you put $10,000 in and you had $50,000, you put $100,000, you have $500,000 in a period of a year. This does not ever happen in a way of a functional thing that isn't going to crash. And I'm going to tell you next why I don't believe that it's going to crash. All right, so that is coming up in a second of why I don't believe that it is going to crash. That's going to be part 2.